At Effortless Mortgage, we've put together 10 most commonly asked mortgage questions. First question. What do lenders look at when qualifying borrowers for a mortgage? 1. Income. 2. Debts. 3. Employment history. 4. Credit history. 5. Property value. The lenders will also want to know that the house is worth the price you plan to pay. Second question. What is the maximum mortgage amount a borrower can qualify for? The rule of thumb is you can typically qualify for 4 to 4.5 times your annual income depending on your debt load. For example, if your income is $100,000 a year, then you can roughly qualify for $450,000 mortgage with bank lenders. The larger the down payment will help increase the maximum amount, so before falling in love with a potential new home, you may want to get a mortgage pre-approval first. This will help you stay within your price range and spend your time looking at homes you can reasonably afford. Next, let's talk about down payment. Third question. How much money do you need for a down payment? With traditional banks, the minimum down payment required is 5% of the home purchase price. With B lenders and private mortgage lenders, 10% to 20% down payment is typical. Fourth question. What happens if you don't have the full down payment amount? There are programs available that enable you to use other forms of down payment, such as RRSPs, a gift from close family members, a cashback product, and others. Our mortgage advisors can give you more advice on down payment. Next, let's talk about rates. Fifth question. What is the best rate you can get? Credit score plays a big part on rates you can qualify for. The lower the score, the riskier you appear to the lenders, the higher the rate. B lenders and private mortgage lenders' rates are higher as they take on more risks. With that said, B lender rates are typically just 1% higher than banks. Sixth question. Should you go with a fixed or variable rate? The answer to this question depends on your personal risk tolerance. Fixed rates offer predictable payments, and variable rates fluctuate but can save money in the long run. There's also a 50-50 fixed and variable option. The choice also depends on the housing and economic factors. Whether variable or fixed is the best one to go with. Next, let's talk about credit scores. Seventh question. What credit score do you need to qualify? Generally speaking, you're a prime candidate for a mortgage if your credit score is 680 and above. The higher you can get above 700, the better, as you will qualify for the lowest rates. If you have poor credit score, the size of your down payment will be the next important factor to the type of mortgage and the rate you can qualify for. The larger the down payment or home equity available, like 20%, the better. 8th question. What happens if your credit score is not great? There are several things you can do to boost your credit fairly quickly. We've created a YouTube video specifically to address how to boost your credit score fast. Just go to our Effortless Mortgage YouTube channel. And lastly, let's talk about closing costs and mortgage payments. 9th question. How much will you have to pay for closing costs? Closing costs can be significant. Nothing is more stressful to realize you don't have enough money to close the mortgage on the date of closing. As a general rule of thumb, it's recommended that you put aside at least 1.5% of the purchase price in addition to the down payment, strictly to cover life, land transfer tax, title insurance, lawyer fees, default insurance if applicable. 10th question. How much will your mortgage payments be? Monthly mortgage payments are dependent on a few factors such as down payment, size of mortgage, amortization, mortgage rate, payment frequency, any default insurance. Learn more about your mortgage options. Visit effortlessmortgage.ca